On today's episode of the Cryptoverse, major Chinese exchanges have stopped margin trading, so I explain what that means to the rest of us. Dash is the privacy-focused digital currency that offers transactions with instant confirmations. Its unique, decentralized decision-making and self-funding system make it an ideal choice as a stable and secure digital cash. Click the link in the video description to learn more. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies, and blockchains. I am your host, Chris Coney. Today is the 13th of January 2017. And I'm back with the last episode of the week, so let's get into it. We begin the day as we always do by going to coinmarketcap.com to have a look at the cryptocurrency prices and look for the biggest winner and the biggest loser of the day. I am so pleased to say we've had a big turnaround. There's green across the board, all but 2 coins today, and the ones that have lost value have only done so in very small amounts. I give a quick honourable mention to Steam, which is the only other coin that's down in the top 20, and it's down by 0.11%, but the biggest loser of the day, down 0.34%, so just 1/3%, is Ripple, and that makes a Ripple token worth 0.6 cents each. And the Ripple blockchain is now worth $240 million, give or take, so that's pretty cool. We've got a lot of double digits in the top 20. The biggest winner of the day, where's the biggest winner? Ah, yes. Down at 18th position as the most capitalized coin, it's Stellar. Stellar is up 13.47%, putting a Stellar token at 0.2 cents, so less than a cent, putting the Stellar blockchain at $16,390,000. Now, if you don't know what Stellar is, it's a not-for-profit organization, did you know? And they claim to be able to run 60,000 or 600,000 transactions for a transaction fee of 1 cent. So they're really going for this here financial inclusion system. And they're talking about remittances and blah, 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 right? It's a financial payments network, yes, etc. But they've got a few differentiating factors, the transaction fee being one of them, and the non-profit angle being another. So if you're interested in that, check out Stellar's website. The only other thing I'll say about the Cryptoverse prices today is right up at the top here, when I look at the overall market cap of the entire Cryptoverse, we're down at 15 billion. I mean, that hurts me. That hurts me. I mean, it was literally only a week ago, I think. It was definitely within the last 2 weeks. Yeah, definitely in 2017. This number was $21 billion. That was I think that was the biggest market cap we'd ever reached. So $6 billion has left the crypto economy since then. And I'm like, oh no, that hurts me. It hurts me. Like I said, I don't mind the value moving from one coin to another, as long as it stays in the new financial paradigm, right? But there's nothing I can do about that. I don't have $16 billion or $6 billion to reinvest. And even if I did, someone else would probably take it out, right? Because it would inflate all the currency prices. People would sell, cash in the profit, and then they'd basically take my money. So that's not really the answer. One individual can't do it. It has to be the collective, the community, the people who all recognize the value and then voluntarily, it's all about doing it voluntarily, join the crypto economy, which, will happen. It's happening. And actually, we're going to talk about the Lightning Network today, which will go a long way to helping us do that. So that's enough of that. Let's have a look at the Bitcoin price chart before we get into the news. Here we are, as always, on bitcoinwisdom.com. I'm looking at the Bitcoin price chart. I'm looking at my old candlesticks, and I'm using the Bitstamp price just for consistency's sake. And I seem to have called it. Yesterday, I was a bit gloomy, because I said, oh my goodness, Bitcoin is broken down below a key. I think I said key about 6 times. Key support line, which was this here support line, $776.95, which had been demarcated by my Fibonacci retracement line at the 61.8% mark. However, looking back here at the most recent prices, I think I was wrong. Because, well, I wasn't wrong. Yesterday, the candle was still forming, and at the time, it was trading below this level. But until the day closed, as you'll see, the price couldn't hold below that level. So these tails are dangling under that 61.8% retracement line, but it wouldn't hold. So what that means is, because the price went back up and closed yesterday way above that, and today, the whole body of the candle and the wick and the tail are all above that level. So I was accurate in my analysis to say that that $776.95 was a key support level, and it is now holding. So I'm very pleased to see that. We are now also back up above $802, which again, psychologically significant, $800. And there's actually some good news coming out of China on the back of the bad news that we saw the other day, etc. So let me talk about that before I get into the main article. So I check a lot of sites on a daily basis to filter out the junk and bring you the most, what I believe is the most pertinent news. Because I can only do one story a day, you know, I'm not a news network. But Reddit is a good source for the breaking news. And I saw this morning. It says breaking news that Huobi and BTCC have stopped margin trading and OKCoin leverage only 1 times. So it says finally no more fake BTC generated by the exchange. Now there's two things. Because some of the Chinese exchanges, they don't charge trading fees, right? Which is like, so there's no friction when someone trades backwards and forwards. And that's just encouraging speculation because there's no cost to just trading backwards and forwards. That also opens up the market for trading bots to just automatically trade backwards and forwards between themselves. And that can create fake volume. So if these bots are just, you know, trading backwards and forwards, handing the coins to each other, and if they're owned by the same master, well, that creates a lot of what appears to be a lot of trading activity. And it doesn't cost the bot owner anything because there's no trading fees. If you introduce just a tiny trading fee, it's like if we had to pay a penny for every email that we sent, well, that would just kill spam overnight, wouldn't it? Because to send 2 billion emails like spammers do, it doesn't cost them anything, right? Even if they only get like a 0.00001% response rate, hey, you know, that's fine. If they make sales off the back of it, it costs me nothing to send it. So that same phenomena is happening with the exchanges. Now, that's that bit. So that's different to this other thing, which is talking about margin trading being halted. Now, I don't want to make this whole episode about what the hell is margin trading, but this is something that investors use to multiply their gains beyond their actual cash holdings. So say if I have £10,000 in a brokerage account, right? I can just buy $10,000 worth of Bitcoin, and then if tomorrow Bitcoin goes up 1%, well, I make 1% on that £10,000, which would only make me a profit of like £100, which is terrible. You know, I risked £10,000 and I made £100. Well, that's just absolutely terrible. And I'd have to do that lots and lots and lots of times to double my money. So what do traders do? They leverage, they margin trade, which is basically where you borrow money to gamble with, speculate with, whatever. So I could ask my broker, I say, hey broker, can I borrow £10,000 please? And they say, yeah, sure, we'll charge you like 0.1% interest per day, right? So now I now have £20,000, 10 of it's mine, 10 of it's not really mine, right? But I can then place a £20,000 trade, buy £20,000 worth of Bitcoin, and then if it goes up 1%, I make £200 instead of £100, right? And then, okay, cool, that's great. Now if I pay back my broker, I give him the £10,000 back, I now have my original 10,000 plus a £200 profit. Well, I've been able to double my profits by only having £10,000. I've profited as if I had 20,000 when really I've only got 10,000, right? And now that's a very simple example. But so that would be 1 times leverage. So I would have 10 grand and I'd borrow another 10 grand. So I would, you know, double my money. But that's not how it goes down in the markets. Some traders and institutions allow traders to leverage 10 or 100 times. So that would be me going to the broker and saying, hey, I've got £10,000 on account. I've got it deposited with you. Can I borrow £90,000? So then I would place or buy £100,000 worth of Bitcoin. And now if it goes at 1%, well, I make £1,000, right? Or 100 times leverage would be where I say, well, I've only got 10 grand, but can I borrow £1 million, or actually £990,000 plus my 10, that would give me £1 million to trade with when I only really have £10,000. But of course, then if Bitcoin goes up by 1%, I make 1% of $1 million, even though I only have 10 grand. Now that all sounds fantastic, right? So, because it increases my gains exponentially, and then I just pay my broker back and everybody's happy. I make 1% of $1 million. I have my 10 grand still, and then everyone's happy. Broker gets his money back. Broker gets a bit of interest. Everyone's happy. Theoretically, that's how it works. However, what if Bitcoin goes down by 1%? Well, that now means the $1 million worth of Bitcoin that I bought is now only worth $990,000. So at that point, I'm like, I've got this £990,000 loan with my broker, and I have to pay him back right now because I've only got just enough money to pay him back. So if I then close my trade, give him the $990,000 back, I've lost my $10,000. And of course, the broker wants some interest as well, so it's even worse than that. And this is assuming Bitcoin only goes down by 1% during the trade. If it goes down by 2%, then I'm really in trouble because that $1 million worth of Bitcoin is now worth $980,000. So I have £980,000 worth of Bitcoin. I owe the broker $990,000 and some interest. Oh my goodness. I pay the broker back. Not only have I lost my own 10 grand, I also still now owe the broker 10 grand plus interest. So not only does margin trading enhance your profits, it also enhances your losses to the same degree. And this is how speculators who know how to do this stuff can move the Bitcoin price so significantly, even though they don't have that much actual cash. Now, I said I wasn't going to make this episode about margin trading, and then I went ahead and explained it. So that's what margin trading is in a nutshell. And this is saying here, this headline from Reddit, it actually links to a tweet where this announcement was made. So it's saying that Huobi and BTCC have stopped margin trading, right? So they're no longer going to allow, temporarily at least for the time being, traders to borrow money or borrow Bitcoin to trade with. Now, what will that do? That will significantly reduce the volatility of the Bitcoin price, because it means no longer can the professional traders slap the average trader about, because the average trader is just only trading with the cash that they have, only trading with the Bitcoin that they have. So everyone's trading to their individual means. So without margin trading, in order to buy or place a trade of 1 million Bitcoin, sorry, not 1 million Bitcoins, $1 million worth of Bitcoin, you would actually have to have $1 million in cash to place on that trade. And that immediately cuts out a whole bunch of traders who only have small amounts of money that were relying on margin to actually make these big gains. So as always with these situations, there are winners and there are losers. The losers are the traders, because they've lost the ability to amplify their profits by trading in and out of Bitcoin. So they're the losers in this scenario. The winners in this scenario are everybody else, quite frankly. Me as an advocate for Bitcoin, because it's significantly going to reduce the volatility. You know the principle, right? Whatever you reward, you get more of. Whatever you punish, you get less of. So if now, because margin trading has been removed, Bitcoin trading now seems, the incentive and the amount of profit that's available to these traders, if the incentive isn't now big enough, they may stop trading Bitcoin completely. And that can only be a good thing, quite frankly, simply because it will stabilize the price movements. And you won't get people with $10,000 with $1 million worth of Bitcoin suddenly selling it all when the price dips a bit and then crashing the price. I apologize for this, but I'm going to have to save my article for Monday because I've talked about margin trading a bit too long here, and I don't want to make the episode a 30-minute episode. But the final thing I'll say about this margin trading thing is to give you sort of a practical look at this. This is the inside of my Magna account, MAGNR. This is a London-based company that does two things. One, it allows you to margin trade Bitcoin, and it also allows you to deposit Bitcoin and earn interest. And that interest comes from the interest that the broker charges to people or traders that they are lending the Bitcoin to. So that's that bit. But if you take a look here on the left-hand side, this is the trading panel. It says here what position size do I want. So I can slide this up and say I want to go in, position size of 2 Bitcoins, say. And then if I go to the advanced tab, there's this thing here that says leverage. And Magna offer 2-to-1, 5-to-1, or 10-to-1 leverage. That is what we just talked about. So 10-to-1 leverage would be, so for every Bitcoin that I buy, they're going to lend me another 10 to trade with. And then once I've placed that trade, if I leave it there, tomorrow I'll come back and I'll look at my positions here at the bottom, and it will show that Magna have charged me a small interest fee. And the longer the trade remains on the table, every day they're charging me a little bit of interest on the loan that they've given me, which is those 10 Bitcoins for every one that I have on the table. If I get sick of paying the interest, I can close the position, but obviously I'll close the position at whatever the price is. And if at that time the price has gone down below where I entered, well, I not only lose the interest, but I also lose, like we discussed a minute ago, some of the money that I borrowed and some of my own money, probably all of my money. So thanks for joining me today, guys. If you liked this episode, hit the like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. Sorry we went a bit off the rails today, but I think that was valuable information. So please support the Cryptoverse and boost cryptocurrency adoption by going to cryptoversity.com/podcast and becoming a patron. From as little as $10 a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. That is all for today, guys, so I will be back with you on Monday with another episode of the Cryptoverse where we will go into the Lightning Network. So until then, it's me, Chris Coney, saying bye for now.